Hello, I'm Tony Kaye. I'm the editor of Eureka Report, and I welcome to the studio today Warren Chant from Chant West. We're going to be talking about superannuation returns, and some figures have just come out in the last week or so. So, Warren, I just wanted you to run through the numbers if you could, just what happened in January and perhaps leading into January, what happened from December to January.
So, Tony, for the 12 months to December 2016, the average fund in the growth, what we call the growth category, earned 7.7%, which was a really good return. It was the fifth consecutive year of positive returns. And since the GFC in 2008, it's 8 years of strong returns, which averaged about 8.6% per annum. So in January, well, actually in December, you know, the stock markets finished strongly during the year, but in January they gave some back, and the average fund really just earned about 0.1%. So not a lot happened in January in terms of returns. And for the 7 months to the end of January, the average fund earned about 5.7%. So when we talk about the average fund, what we're talking about is a fund that on average invests about 70% of its shares, of its assets in shares and property. But there are a lot of investors out there, particularly retirees, who don't invest as much in shares and property. They probably only invest about 30% in shares and property, and the returns of those people, and they're a large percentage of our population, the returns for those people are also very solid.
Yeah, and just breaking down the results from the latest period, I think shares, or Australian shares, were a bit flat. International shares were stronger performers than our shares. Is that correct?
That's right. International shares on a hedged basis were a little bit over 1% positive return. But on an unhedged basis, remember they're subject to what happens to the Australian dollar versus the US dollar, and the Australian dollar appreciated. So the returns on an unhedged basis were about a negative just over 2%.
And I think my reading was that real estate investment trusts in Australia and overseas both gave back some ground over the latest period.
That's right. So the listed property trusts in Australia and overseas have really been strong performers in the last 18 months. So it's not unusual, you know, typically when we see an asset sector perform really well, it's not unusual to see it to come back a little bit. And if we sort of go back a few years, you know, listed property here and in Australia performed really poorly. So we've had poor performance and we've had strong performance. And in January, which is only 1 month, and a very quiet month typically, they gave something back.
I think one of the interesting things about this year so far is just you've got this climate of uncertainty around the world, you know, in the US, in Europe and other parts of the world, and that's having differing effects on markets generally and on other types of assets. It's quite interesting to watch that. How do you see that all panning out?
Well, look, it's interesting that you raised that point. We're a keen student of what's happening with investments and investment markets, and I could say to you over the last 18 months, we hear from so many experts that there's so much uncertainty in our markets. You know, we didn't know what was going to happen with the US election. We didn't know what was going to happen with Brexit. When we did know about Brexit, there was concern, and then it sort of things came back to normal. We didn't know that Donald Trump was going to become US president, and initially there was concern, but things seem to have sort of settled down a bit. So we do have there's always unrest in the Middle East. There are lots of problems. There's been lots of problems in Europe with the refugees. So for some period of time, we've been, experts have been saying there's great uncertainty in the markets and it will affect the markets, and of course it does. But as I said, a well-diversified portfolio in calendar year 2016 generated a return of 7.7%, you know, when cash rates are 1.5%, 2%. So despite the uncertainty that we're experiencing, markets have still performed. And even as we sit here now, I mean, I don't know, it's probably the last 2 years that the vast majority of commentators have said interest rates are at a 100-year low, and the only thing that can happen is that they'll go up. Well, the thing is, they've kept coming down, even though it's only a little bit, but the returns in the fixed interest markets have been way better than anybody expected. So we live in a world of uncertainty. It's just a fact of life, and investment is all about uncertainty. But in terms of the returns we've seen in recent times, so as I said, the last 5 years, we've had 5 consecutive years of positive returns in superannuation funds, despite all of the uncertainty.
And what we tell our subscribers and clients is really you have to focus on the long term. You know, you've got all these daily happenings in markets and you know, chopping and changing all the time. But really, if you focus on the long-term results, they've been very good over time.
Well, that's right. So I was just looking at the returns for the average fund in that growth category over 7 years are 10% to you know, 10 years to the end of January. And 10%, those funds, what they're trying to achieve, they're trying to beat inflation by between 3 and 4%. So if we say that inflation's been about 2.5% for some time, 2.5% from 10% is a 7.5% real return. That's a fantastic return. It's way above what they're expecting to achieve. If we look at 10 years, and 10 years we get that terrible year in 2008 when I think we had a return of minus 20+%. The 10-year return is about 5.7%. And even when you take inflation off that, you're still getting a sort of a 3% real return, which is not too far off what these funds are trying to achieve. And in that period, we have this, you know, probably the worst year in sort of our financial history of minus 20-odd%. So, yeah, the longer term returns for Australian superannuation members have been really, really strong.
Well, thanks very much for coming into the studio, Warren. It's been a pleasure to have you in and to talk about the latest results and also some of the key trends which investors should be looking at over the longer term.
My pleasure, Tony.
Join us again next time.